Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about suggestions to IBA and UFBU for considerations in the 13th Bipartite Settlement and 10th Joint Note, a Special Voluntary Retirement Scheme (VRS) with career progression options. Introduction. The banking industry is undergoing rapid transformations driven by digital banking, automation, changing customer expectations, and increasing competitions. To meet these evolving challenges, banks need a workforce that combines experience with innovations and adaptability. While senior employees possess invaluable institutional knowledge, many have remained in the same rank or designations for several years due to limited promotional opportunities, organizational restructuring, or other administrative factors. As a constructive suggestions, the Indian Bank Association (IBA) and the United Forum of Bank Unions (UFBU) may consider introducing a special career progression and voluntary retirement scheme (VRS) as part of the 13th Bipartite Settlement and 10th Joint Note. Such an initiative could provide flexibility to experienced employees while simultaneously creating opportunities for younger employees to contribute to the future growth of public sector banks. Suggested eligibility. It is suggested that the scheme may be made available to employees who satisfy the following broad conditions: employees of all ranks and designations without discrimination, age of 50 years or above, minimum 10 to 15 years of continuous service, employees who have remained in the same rank or designations for the last 5 to 6 years or more, irrespective of the reasons behind the stagnations. Before offering voluntary retirement, eligible employees may be provided with one of the following options: immediate promotions or placements in the next higher rank designations, enabling them to shoulder greater responsibilities and contribute more effectively during the remaining years of service, or an opportunity to opt for a specially designed voluntary retirement scheme (VRS) with attractive financial benefits. This dual option approach would recognize employee experience while respecting individual career aspirations. To make the scheme meaningful and financially secure for employees, the following options may be considered. Option A: monthly salary continuation. Employees opting for VRS may continue to receive their basic pay and plus dearness allowances every month until their normal date of superannuation. This arrangement may help employees meet ongoing financial commitments, continue repayment of housing, vehicle, education, or personal loans without financial stress, plan retirement with greater confidence and stability. Option B: lump sum settlement. Alternatively, employees may be offered a lump sum payment equivalent to the remaining basic pay plus DA payable up to the date of normal retirement, calculated on the date of VRS. Employees could choose to invest the amount in suitable long-term deposit products, place the funds in monthly income certificates (MIC) or quarterly income certificates (QIC) or deposit benefit deposits (DBD) or term deposits or any other approved investment avenue, depending on the facilities offered by the bank. Receive regular monthly or quarterly income until reaching the normal retirement age. Loan support proposal. For employees requiring immediate funds against such investments, banks may consider extending loans against term deposits or other eligible deposits. Preferential interest rates. A symbolic or nominal rate of interest such as 0% or 0.10% per annum, subject to regulatory approvals and financial viability. Such a facility could provide liquidity while preserving long-term financial security. Potential benefits for employees. A carefully designed scheme may provide several advantages, including financial stability before retirement, freedom to pursue entrepreneurship, consultancy, agricultural, education, social service, or personal interests. Reduced work-related stress for employees who wish to retire voluntarily. Greater career satisfaction through either promotions or a dignified voluntary exit. improved work-life balance during the pre-retirement phase. Potential benefits for banks. From an organizational perspective, such a proposal may offer several long-term advantages. Creation of promotional opportunities for reserving junior employees, better succession planning, infusion of younger talent with modern technological skills, improved workforce planning aligned with digital banking initiatives, increased operational agility and adaptability, potential improvement in employee motivations through faster career progression. Possible financial impact. Although a special VRS may involve an initial financial commitment, it may also generate certain long-term operational benefits such as progressive reduction in long-term salary expenditure due to replacements by employees in lower pay scales, increased productivity through a balanced workforce comprising experienced mentors and younger professionals, growth in bank deposits if VRS proceeds are invested in the bank's own deposit products, additional lending opportunities through loans against deposits, potentially contributing to create credit growth while maintaining asset quality. A detailed actuarial and financial assessment would, however, be essential before implementations to evaluate costs, sustainability, and long-term impact. A balanced approach, introducing both career progressions and voluntary retirement as parallel options, would recognize the contributions of long-serving employees while ensuring that the banking sector remains future-ready. Employees who still wish to continue serving could contribute in higher responsibilities through promotions, whereas those seeking an early and financially secure exit could do so voluntarily. Such flexibility may improve morale, workforce planning, and organizational efficiency. Conclusion. The proposed special VRS and career progression framework is intended purely as a constructive suggestions for considerations during discussions relating to the 13th Bipartite Settlement and 10th Joint Note. If found feasible after appropriate financial, legal, and regulatory evaluation, such a model could provide a balanced solution that supports employee welfare, organizational renewal, and sustainable growth of the banking sector. Any policy adopted should strive to balance the interests of employees, management, customers, regulators, and the long-term financial health of banks. Disclaimer. This document represents a personal suggestions intended to encourage discussions on possible employee welfare and workforce management measures. It does not represent the views, policies, or decisions of the Indian Banks Association (IBA), the United Forum of Bank Unions (UFBU), any bank, government authority, or regulatory body. Any implementations of such proposals would be subject to mutual negotiations, legal provisions, regulatory approvals, financial feasibility studies, and the final decisions of the competent authorities. Thank you very much for your patience. Request for like, subscribe, and share.